This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming out of a midweek holiday. Some were saying that the break is not long enough, but be that as it may, we are back this Wednesday morning to track markets once again. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. I think the best thing about today is that it feels like a Monday, but it's not. It's actually a Wednesday. So it kind of makes it a little easier, right? That you're already at the halfway mark. And plus, we're going to start off with absolutely phenomenal cues for the bulls. I
yeah.
think Prashant's color really says it all.
Oh.
Well, markets aside, guys, good morning. It's a good day, right? For all those, brother-sisterly love as well. Today it's Bhai Dooj as well. So, wishing my sister, wishing all the sisters and brothers across India as well. Very, very special day. Blessings on that brother-sister bond. Besides that, it's a bigger day. India's taking on New Zealand. That's going to be...
You're in Mumbai, so it's...
You're in Mumbai. Second half of trade, I don't know who's trading and who's not. But that's going to be... And obviously, I'll put it third on the list that the equity markets are quite buoyant today. But that's the primary focus.
No, I think absolutely. So, whatever you need to do before 2 o'clock, I think, right? Before the match starts. But I think it's going to be a good session, and why not? Let's just kind of kick off with what you need to know as we begin the new session. You basically have, a situation where, it's almost a massive rally last night. And this is not so much about the S&P, it's not about the NASDAQ, but across asset classes. So we saw massive moves across equities, rates, the dollar index, not so much oil, but the first three we did. So the changes will come up on your screen. The NASDAQ ending about 2% higher, the S&P ending about almost 2% higher, and the Russell 2000 ending 5.5% up. The point about Russell is important because that is it's been down for the year, even as other indices. The other two indices have been up and up decently for the year. The small cap index in the US, which is more representative of the overall economy in the US, has been struggling, has been hurting. That went up 5.5%. That's the typical value trade which kind of played out, right? Now, what was the trigger behind all of this? You had inflation numbers which came out last evening. Core CPI is coming at about 0.2% month on month. This was a big miss to consensus expectations. The consensus was around 0.3, 0.4% or so. That CPI miss, the inflation miss, really unraveling any remaining expectations that the Fed will hike one more time this cycle. We've been making this point since that last FOMC 2 weeks ago that, how the consensus has moved very sharply, and for the first time, some of the last holdouts in terms of mainstream economists, etc., have all come around to the fact that this is it. The Fed is done, and we won't see any more rate increases. I think that feeling is getting reinforced. I just want to put out a table which tells you the sort of intensity of the moves, especially on the rate side. Look at yields, bond yields, 5-year down 23, 10-year down 19, 30-year down 13 basis points. So these are very, very large moves, and there is more coming. I don't want to get into the technicals of it in great detail, but it looks like, especially on the 10-year, since that's what we talk about the most, the next levels, which perhaps will come through, are the 4.34 to 4.36 levels. This is nothing but the 2022 highs and the August 2023 highs as well. So there seems to be sort of another 10 basis points, at least, if not more, here on the 10-year. Now, also, by the way, on the rates, we are on the cusp of posting what is a bearish outside week, which again kind of reinforces the point I'm making. The dollar index sold off aggressively. We had about a 1.5% cut. We are back at about 104 levels, not the 106.5, 107 levels we saw a few days ago. Now, on Monday, the Muhurat session, we were wondering and we were saying whether we have a line of sight to the all-time high. And I think we do, right? Very clearly now, it's 3.5%, 4% away, not even that now. So the Nifty on Monday, just to kind of pick up where we left off in terms of levels, managed to stay above the 40-day exponential moving average on a closing basis. That's great, 19,443. I'm not even talking about what happened on Monday because, Yesterday's session is all that matters. Monday was anyway actually absolutely flat in terms of US markets. Support for the Nifty comes in at the 20-day, which is slightly lower, which is at about 19,330. So there is actually both the 40-day exponential and the 20-day, which should act as supports. Resistance for the Nifty on the upside comes in at 19,500 and the 19,700. I'm rounding off both numbers. The exact numbers are on your screen, which is the 50% and the 61.8% retracement of the falls from the all-time high to the low that we saw. For the Bank Nifty, similarly, we closed above the 40-day exponential moving average, which is 43,875. And here, the next resistance levels come in at 44,200 and 44,700, which is again the 50 and the 61.8% Fibonacci retracement levels. But I think, I think there is enough in the tank for the market perhaps to push even higher, not today, but over over the next many weeks. The small cap index, that continues to be the strongest part of our market. Even on Monday, when the rest of the market did not do very well, the Nifty was down, etc., the small cap index ended at a new all-time closing high. The GIFT Nifty will come up on your screen. I mean, the only peeve is that we start with a massive gap up, right? That's the only thing. So I never like chasing a move higher. So you want to look for dips and, that perhaps will appear, not large dips or anything of that sort. I don't think that's the case. But even small dips, I think that's the better way to get an entry, not 200 points higher and then hoping to sell even higher. If you're trading, at least, if you're investing, I'm assuming you're already in and you'll see the portfolio glow as markets open this morning. So that's what we have this morning. Surabhi.
Here's hoping that glow lasts, right? Well, it has everything going for it, I guess, with the kind of cues that you just spoke about. I just want to go back to the DXY and the 10-year right now. I mean, even now, the 10-year is falling even further. 4.5% was that first reaction overnight. Now it's 4.4% because of that US CPI number, 3.2% for October versus 3.7% in September. That's, of course, the year-on-year comparison on the US CPI print coming in lower than expectations and also big fall. I mean, just year-on-year, if you're looking at what September was versus what October was. The dollar index, of course, Prashant has mentioned. Let's just pull that up. Again, it's around the 104 pivot. So it's retaining a lot of that cut. It fell 1.5% immediately after the data, and it's retaining that kind of loss. It's still around that handle, and the US 10-year is looking even better from the bulls' perspective. Asian markets are a deep sea of green today. The rally is across 1.5% to 2%, depending on which one you're picking up. The Hang Seng is up over 2%, 2.3, 2.4. Japan is up almost 1.8. South Korea is up about 2%. So it's a big move across Asian markets. Therefore, we're expected to start along with this tidal green wave that we're getting this morning. The other thing is that there's an inflation bonanza even here at home. So the CPI print for India was looking very, very good. The October print came in at 4.8%, a dip versus the 5% that we saw last time around in September. The good news is that core CPI continues to cool off as well. So core CPI is at 4.2%, which is lower than estimates. It's also lower than the October number. We were at 4.5% in October. And we are at 4.2% right now. The only niggling issue is food inflation, and we'll hear more from experts as the day wears on, because food inflation, vegetable inflation, pulses inflation, those are still sticky areas. So this number didn't fall. It was expected to cool off a bit, but it didn't. So let's see how that goes. The flows picture is looking all right. FIIs were sellers, but DIIs, as usual, they were offsetting a lot of that negative outflow. So 1,200 crores gone from the market, but 830 crores coming in. This is, of course, as per Monday's stats. But there's good news even here. I looked at the FPI selling intensity over the last few months, and that's reducing. So far, so good. November, it's a trickle. We are down just less than 500 crores compared to a selling of almost 25,000 crores in October, about 15,000 crores in September. Of course, and June and July were the big deluge inflow months of 45,000 crores and so on and so forth. But the short point is that FPI selling has reduced in the first half of November. So let's see how that plays out. Again, as Prashant mentioned, even for me, I'm watching to see if today is indeed that breakout day. The Nifty has spent 6 trading sessions consolidating in just a very narrow 500-point range of 19,000 to 19,500. 6 days of consolidation, and then you get these bazooka positive cues coming in. So can we get a breakout? We probably will in the morning. But Nigel, the question is, can this sustain, and can we really build on from here?
Well, Surabhi, in terms of the wish list that I would have from a bullish perspective is, when we come back tomorrow, we should be higher than the start today. So you close higher than the start. Gap up is good.
Yeah.
And the second one on my wish list is, when we come back tomorrow, we are talking about the big final. So both those two factors is what I'm looking at for the day. Let's run you through trade setup. First up, cooling in US yields, very, very good news for the equity markets, and maybe better news for the Nifty IT index. So the tech-related stocks, they should do well today. The Nifty Bank, that plays out weekly expiry, so that's going to be the other focal point in there. So both the pillars of the market will be in focus. And the Nifty and the Nifty Bank, well, they'll be running into resistance at the 50 and the 100 DMA. They've already conquered the 20 and the 200 DMA. So both of them will be looking at that mark. And the strength in the broader markets, I expect that to continue. How the FI is positioned? Well, they unbound some short positions on Monday's trading session. And now the short positioning is at around 81%. On the options side, the Nifty options data should come up for you. The 19,500 call, well, the total open interest is a crore shares odd. It was being written quite aggressively. The total open interest build-up was close to around 25 lakh shares on Monday itself, and the premium was roughly around 41 rupees. Putting all that together, well, the resistance zone is at around 19,550 to 19,600. And I say that the 50 and the 100 DMA as well is in that vicinity. In fact, the 50 DMA is at around 19,575. So that's the important mark out there. 19,550, 19,600, that's a bit of a resistance zone. On the downside, though, the highest open interest on the put side is at around the 19,400 put. So 19,350 becomes extremely crucial. On the Nifty Bank, resistance is at around that 44,250. And I'll explain why. 44,000 call has the highest open interest. The premium of there is roughly around 100 rupees. Besides that, if you look at the 50 as well as the 100 DMA, it's in that vicinity of around 44,230 to around 44,500. So that's the reason why I'm saying this 44,250 is an extremely crucial zone. On the downside, you're looking at the 20 DMA. And once, till we're holding above the 2,200 DMA, you're feeling pretty good. So the GIFT Nifty suggests a gap up. The Nifty IT index is likely to do well. The Nasdaq as well did well overnight. Cooling yields, good for them. And the other factor we're looking at is the Nifty Bank. Can it build on to this gap up? Very, very crucial.
Okay, so in all probability, off to a superb start, and then we'll see what happens from there. Let's get you the calls for the morning then on equities. Chetan Seth of Nomura says, overnight, the widely watched US inflation numbers for October came in softer than expected across the board. In particular, he says US core CPI came in at 0.2% increase month on month, while the Fed's closely tracked super core CPI came in at an increase of 0.22% month on month. He thinks this report will be welcomed by the Fed and markets. He adds overnight US stock futures rallied. Bond yields declined and the dollar index was softer by 1.3%. He expects the recent relief rally in Asian stocks to extend further and says a breakout rally in stocks is now not a foregone conclusion as a soft landing narrative takes shape into Q1 of 2024.
Okay, well, let's get you some money market views as well. Kunal Sodani of Shinhan Bank says US inflation slowed more than anticipated, resulting in a sharp decline in dollar index, reaching the 104 levels, along with yields cooling off sharply. He says investors are expecting rate cuts sooner and betting on no more hikes by the Fed in 2023. He adds all eyes now on US producer price index and retail sales data for the USD INR. He says 82.85 to the dollar remains a strong support, while 82.2 to the dollar is the resistance.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But we run you through the licks first up. We're looking at Narayana Health, Manappuram Finance, Natco Pharma, Wockhardt, Biocon Biologics, and Kalyan Jewellers. They are stocks on the back of positive news flow. While on the flip side, you have Grasim, Aster DM, NMDC, and Yatra Online could be reacting to negative news flow.
Okay, well, we've got Dean Kim, Head of Global Research Product at William O'Neill, joining us right now to take some questions. Dean, good to have you with us here. Thanks very much, as always. It's going to be a good start. It is all bright and green across Asia. Do you think what happened overnight with the CPI, etc., clears up the path to a year-end rally?
Yeah, certainly character change today. Really good gap up since the cooler than expected CPI print. Both NASDAQ and S&P, they basically stopped making lower highs and lower lows. So it's really great to see that. We just need the breadth of the market to improve. Currently, we're still a bit narrow with only 29% of New York Stock Exchange stocks trading above their 150-day moving averages. But if we look at Russell 2000 index performance today, that's a good harbinger for what we should expect going forward. And so if we do see continued PPI print coming in cooler than expected, definitely we should see sort of a change in character in terms of the way the Fed is thinking. I think that sentiment is kind of spreading towards other markets in Asia. We're noticing AAXJ really gapping up today. They're breaking above resistance at the 100-day moving average, still below the 200-day moving average, but clearly a positive sign.
Dean, hi. Good morning to you. So I think the question that everyone's asking is that if this fall in inflation is going to be durable in the U.S., and if we've already seen the peak in U.S. interest rates, then can we get a really strong equity market rally, or will it be more sort of consolidation as the economy deals with then this higher for longer narrative? Maybe no more rate hikes, but if rates remain elevated. So which camp are you in? Are you expecting a bigger rally because now we're past the peak, or could it still remain a bit complex?
Yeah, it's a tough thing to sort of forecast what's going to happen out there. But, we continue to think about one thing, which is if we look at all of the data that's been coming in through earnings, for example, Home Depot reporting overnight, and they're citing sort of slower than expected growth going forward. And we've seen a lot of job cuts as well, and we think more are coming. And so we may get a situation where we may have one more leg down. It could be a shallow sort of correction, given the fact that consumers are still fairly relatively healthy. But we do expect a bit of a pullback before sustained rally. And so by then, probably the Fed is going to take the cues of, weakening consumers, further job cuts, weakening retail sales in the market. And that's probably the clue for them to start cutting rates. And we don't expect anything like that to happen probably towards the second half of next year. And so, right now it feels great for the market to sort of gap up, and but I continue to look at relative strength, or RSI. It's sort of hot right now, so we may see a bit of a pullback. But the good news is there is a lot of support for both S&P and Nasdaq at around the 100-day moving average, and so it's certainly not going to be a straight line up, but we will see gradual improvements.
All right. Hi, Dean. Good morning. Give us a quick couple of levels then on the Nifty. What is the level you're looking at in terms of a resistance zone? Point number one. And point number two, yes, Indian markets are in a structural uptrend and the bull market is alive and kicking. The problem is in November so far, actually, we've underperformed what the US markets have done. How do you see that playing out? Do you expect us to start outperforming at some point of time?
Yeah, I think so. I think India continues to have very consistent organic growth. No one can deny that. There's no other markets in around the world where you can see continued double-digit organic growth. So I continue to see India as a fantastic market to be in. Now, in terms of supports, right now the sensex, when I look at sensex, the next support is right here at the 10-day moving average. But when hopefully we could see a gap up when it opens, and resistance would be at around 100-day moving average, which is 1% higher. And so if we can get over that 100-day moving average, then I think we can firmly say that Indian market is going to be in confirmed uptrend. But on a longer term basis, continue to see very good trending market for India.
Okay, well, Dean, we'll leave it there. Thank you very much for joining us. So, it does look like it's cleared up what's happened overnight. A significant data point, which has opened the floodgates of bullishness, and maybe we will today get the kind of session we should have had on the Muhurat Diwali session. We'll, come back to some of this stuff in just a bit from now. But we have also had the inflation numbers here in India, which came in slightly higher than the CNBC-TV18 poll, but lower since it was the lowest number since May. Lata is here with details on what to make of the number. Lata.
Yes, it's actually slightly higher only compared to our poll of 4.8. It's 4.87. But importantly, as you said, it's the lowest since before the tomato-infused inflation. So that seems to be over and done with. The important point is that much of this fall is because of a high base also. October of 22 was 6.77. So there is a base playing here. Within the internals, food is still a problem. That's the negative at 6.6%. Despite the fall in tomato prices, we have not really improved from September or August levels. And the positive is core inflation, just 4.2 compared to 4.6 in the previous month. And, globally, the way China is slowing and the US inflation coming lower, it looks like core inflation is going to be our positive. But you have to dwell a little more on the pain point in food inflation. In spite of tomatoes going down, you have a very high inflation because, there are new fires now. Eggs, 9.3%. Fruits, 9.3%. These were never problems up until now. Cereals is 18.6% higher. Pulses, not cereals. Pulses is 18.6%. It's a very important part of Indian diet. Cereals are up about 10.6, 11%. Not low at all, despite October being the month when the harvest comes into the market. So spices have been running at 21, 22 for a long time now. There are many fires to fight here in food inflation, but it will not move the needle in headline inflation. So it's not as if one is expecting any action from the Reserve Bank, but these are important issues for the Reserve Bank. You can't blink. So most people are not expecting any rate cut from the Reserve Bank up until August next year or June next year at the earliest, mostly August. But the bond market is clearly going to ignore all this. At the moment, it is only reacting to US bonds. So we should see a reasonable amount of rally in the bond markets. But I just want to keep it in mind that for policymakers, both at Delhi and in Bombay, the food inflation will be a worry.
And it is a worry for us as well, Lata.
For every one of us.
The headline reads great, but I know what you're talking about in terms of the food inflation.
I think that one, you're not talking enough. It's quite bad.
Absolutely. Thank you so much for all the cues there on the inflation front. At least the top number, the headline number looks good. We will take a break on that note. We'll come back on the other side and boil this down to, of course, the stock list, the top stocks to watch out for today. Our team will join in. Welcome back. So as we've told you, the narrative is exceedingly positive this morning. What about individual stocks? It's time to talk about the CNBC-TV18 list of top stocks to watch. Nigel is first off the crease with Grasim. How did those numbers look, Nigel?
Well, a little weaker than expected. Now, we're looking at the standalone numbers out here because in the consolidated numbers, you'll have Ultratech as well as AB Capital, and we already have both those two. So standalone numbers is a smaller part of the SOTP, but it was a bit of a miss. Top line was bang in line. You're a little bit higher than what we were working with because volumes were a little bit better. But on the EBITDA front, it came at around 600 crores. We were working with a number of around 640 crores. So a mild miss out there. The VSF business actually did quite well, and it beat what most analysts were working with out there. The problem is on the chemicals business. It did miss estimates by more than 10%, so that's a problem point out there. The net debt has gone up, but that's on expected lines because they're spending more on the paints unit, which is likely to get commissioned from Q4 onwards. So those numbers a little bit subdued. So the stock will be reacting to that.
Okay, all right. So we'll watch out for Grasim. Ekta joins in next on a bunch of stocks from the hospital space. Ekta, good morning.
Morning. Well, I'll start with Narayana, which I expect the stock to be in the green because the revenue was up 14%, margins 23.6 versus 21%. And in fact, they've come in at a multi-quarter high and the profit was up 34% year on year as well. Q-on-Q, the margins have improved as well. Like I mentioned, multi-quarter high with a Q-on-Q improvement in profit. Cayman Islands, the revenue was 31.5 million versus 29.1 million year on year. So there's been an improvement within that hospital, which they operate outside of India. As to DM, I expect the stock to probably be in the red. They have operations in Gulf as well as India. Revenue was up 18%, margins 11.4 versus 11.3%, but they've recorded a loss on account of an exceptional outflow of around 54.6 crores. Margins have come off a little bit on a Q-on-Q basis as well. Now, the company has updated us with regards to the restructuring and the separation of the Gulf as India business. Negotiations with shortlisted majority bidders for the Gulf business are at an advanced stage. The promoters intend to continue participating in the Gulf business and hold on to stake in the buyer entity. But the process is taking longer than expected given the size and the complexity. So maybe that particular line could weigh on the stock this morning.
Okay, Ekta, thanks very much for that. Do note we will connect with the management of Narayana Health at 9:30 here on Bazaar a little later down the show. But NMDC is the next one we're focused on. Nigel.
Well, those numbers are a little bit disappointing, actually, NMDC. We already have the volumes numbers with us, but the volumes number as well in comparison to what was given on the provisional basis was a little bit lower. So the revenues and the EBITDA number should come up in the screen. On a year-on-year basis, it looks good, but it's still lower than what the street was working with. And the problem is in margins, because in Q1, they did margins in excess of around 35%. And that's come down to sub 30%. So clearly some kind of margin pressure. The big miss though came in because of realizations. And the realizations, if you look at it on a year-on-year basis, is looking good. But on a quarter-to-quarter basis, it's down by close to around 700 rupees. And that's where the problem pocket was. The street wasn't working with such a big decline in terms of realizations. One probable point will be that the contribution coming in from Karnataka is higher. And remember out there, because the iron ore sales over there are auctions, so some part of that money is kept back. So that could be one of the reasons why realizations were a little bit weaker. The profit number was up by close to around 6%, but the other income was much lower. I'll tell you what, the stock could react marginally negatively. But the good news is from Q3 onwards, realizations will look up because they have already taken a price hike, and also globally iron ore prices have shot up. Numbers go down as a miss, but I expect the stock to recover from the day's low. Let's hop across to Abhishek, though. He's here to tell us about Manappuram. Hi, Abhishek. Morning.
Morning, Nigel. So, Manappuram reported a good set of numbers. The AUM growth was about 27% YOY and about 5% sequentially. The gold loan share that continued to decline now at 53.4% when compared to 62.6% on a YOY basis and about 55.6% on a sequential basis. So, it's more moving towards becoming a diversified NBFC rather than just gold financing NBFC. Calculation shows that the net interest margin has expanded on a sequential basis to 15.07% versus 14.86% in the previous quarter. Analysts were working with a margin expansion of anywhere between 5 to 10 basis points, and this is on the higher side, and that is on account of the yields that they have been able to command. So the non-gold portfolio actually has strong yields, which is aiding this time around. NII, that is net interest income, is at 1,467 crore. We are working with a number of 1,365 crore. Their other income was at 17.3 crore, which has declined both YOY and quarter-on-quarter. The PAT has come in at 561 crore. We are working with a number of 517 crore. So strong set of numbers coming in from Manappuram. Back to you.
Okay, got that. Abhishek, thank you very much. We'll watch out for that stock. Back to Ekta. She has a couple more on her list. Which ones are those, Ekta?
Well, I'll start with Biocon. Their biologics team or arm has received the UK approval for a particular biosimilar called Aflibercept, which is basically going to be branded at Yesafili. Now, it is important because they have already received approval in the European Commission for it. They are pending US FDA approval for it as well. Brand sales around $790 million, and it is used for ophthalmology conditions. So it is definitely a step in the right direction for Biocon to get approval for this particular biosimilar in the UK markets. Wockhardt numbers, revenue 753 crores, margins have improved all the way to 10% versus 6%, loss is 95 crores versus 263 crores, so that's narrowed. Even on a Q-on-Q basis, the margins as well as the profit look better, or the loss looks better. WCK 5222, with the particular drug which is under development, they've recruited more than 40 such patients for their global clinical trial, and they seem to be quite positive in terms of the outcome of it. It's been used for compassionate use on 10 people, and the success rate has been 100% according to the company. Natco expect the stock to be in the green because it's an inline set of numbers aided by Revlimid generic. So revenue around 1,031 crores, margins 44.4% versus estimates of 44%, and profit 369 crores, which was marginally higher than the street estimates.
Okay, Ekta, thanks very much for that. Kalyan Jewellers and Yatra Online also came out with numbers. Mangalam is here with details. Mangalam, morning.
Good morning. So Kalyan Jewellers reported a good set of numbers, just as directed by the company in their second quarter update as well. So 27% is what the overall revenue of the company grew. India revenue was up 32%. The margins compressed a little from 7.7% to 7.1%, but that's largely because of one, slightly lower gross margins. But importantly, the company has had some pre-operative expenses of store expansions as well. So once they start to perform, the margins would come back too. The net profit up by 27%. Internal strong as well. South business grew 8%, but the non-South business where the company is focusing grew 81%, and studded share was at 29% versus 26%. This again is a high gross margin business. But the biggest positive takeaway was the company giving us an update of the third quarter as well, where they said the revenue growth for the third quarter up until November 12th, which included Dhanteras sales as well, was up 35%. So that's one positive. Expect the stock to be in the green. For Yatra Online, however, expect the stock to be in the red because the larger margin chunk of their business, which is the corporate business, was rather weak. So revenues grew 14% year on year. The company reported a loss of 8.4 crores on the EBITDA front, but that was largely on account of a couple of one-off expenses related to listing and ESOPs. And the net loss that the company posted was close to 17 odd crores. But the B2B business was impacted by slowdown in IT traveling, and the consumer business grew around 28%, which was faster than the industry, but that is a business that gives them lesser margins.
Okay, got that. So not so great for Yatra. Kalyan looks fairly good. In fact, we'll be speaking with the management of Kalyan Jewellers right here on Bazaar at 9:40. So make sure you catch that interview as well.
Well, here's a quick recap of all the top stocks that we just discussed. Stocks with positive news flow include Narayana Health, Manappuram Finance, Natco Pharma, Wockhardt, Biocon Biologics, and Kalyan Jewellers. While stocks with negative news flow, Grasim, Aster DM, NMDC, and Yatra Online. There's a big rejig as well that we're looking forward to. The MSCI Quarterly Index rejig, 9 stocks being added to the Global Standard Index with no deletions. Vivek joins us to run us through all of those names. Vivek.
Well, good morning. That's right. So early today morning, MSCI, as part of the Global Standard Index rejig, they went ahead and updated the list of stocks that they have updated and adding to the Global Standard Index as well as the other indices that MSCI India actually runs. Now, when you're talking about this particular list of stocks, remember, whole host of quant analysts have already started penciling in these names, well in advance. So a lot of names are along the lines of what was already penciled in as far as analysts were concerned, especially quant analysts. So now on November 30th, the actual flows will come in, and these flows will come in from passive fund managers. Now, this is a net inflow event as far as India is concerned, and it's a significant inflow event. Over $1 billion of inflows is what India will receive on November 30th on the back of this MSCI rejig. So which are the stocks that are in focus? The first stock is APL Apollo Tubes, Tata Motors DVR, Macrotech, there is Lodha, Tata Communication, Persistent Systems. This particular stock will see inflows of over $220 million, quite material over there. IndusInd Bank, we highlighted this particular name as soon as the foreign shareholding update had come out, given the fact that now there is enough headroom for MSCI to add this particular stock, and it has come in as per expectations. Polycab 197, that is a Paytm, and Suzlon too makes entry this time around, and sizable inflows of over $241 million. No additions like you mentioned. Along with that, the India Small Cap Index, that is the MSCI India Small Cap Index, sees 42 additions and 19 deletions. Amongst them, the top names that are likely to see quite a bit of action are Gateway Distriparks, Aluvilia Contracts, as well as Gokuldas Exports.
Okay, well, we'll take a quick commercial break here. Vivek, thanks very much for that. We'll be joined by Deven Choksi, Managing Director at DR Choksi FinServ, to discuss some fundamental stock analysis. A little later, we'll also have the management of Kaplan Point Labs to discuss the company's performance for the quarter gone by. Stay tuned.
Welcome back. Hope you're having a good morning. The GIFT Nifty is suggesting we open up higher, and things are looking pretty good overnight. Just to recap, overnight you had the inflation print that was lower than expected, and that's why the dollar index cooled off. The yields as well cooled off, and that's why the GIFT Nifty is feeling good. But plenty of stocks to discuss. To help us out with that, Deven Choksi, the MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning. And first of all, wishing you a very happy New Year, happy Diwali as well. Hope the festive season is going well for you. Well, want to discuss a few stocks as well. Grasim, that came out with its set of numbers. It's only the standalone business, actually, so it's a smaller part of their SOTP. But those numbers are a little bit weakish. How do you see things shape up here with the paints division all set to be launched in the coming quarter?
Hi, Nigel. Good morning, and wish you all a happy new summer year. Well, I think the beginning of the new year, probably you are seeing a good amount of traction in the consumer spending. And that is where I think companies which are positioning themselves into the areas where the consumer is spending maximum money, I think that's what is going to be interesting play to be worked out for. Grasim is entering into paint business, of course, but I think for first 5 years, one will not see the profit in the balance sheet. That is understood. Largely because of the fact that on the one side, I think you have got a significant large amount of penetration, which is there from the existing paint players with an established brand. On the other side, the bigger challenge remains, most of them would be on the raw material side, given the kind of fluctuation that we have with the crude oil prices, the paint industry, which is basically essentially deriving the derivative of crude oil products into the input cost, I think they are most vulnerable to this situation unless you have got a back-to-back backward integration with supply chain logistics as well. I think that is where probably paint business is not looking so very exciting to me, neither for Grasim nor for JSW at this point of time. We believe that I think it will take at least 3 to 5 years before which I think we would see the actual traction happening into this business from this company's side. So, though potential remains high, at the same time, in the near term, 3 to 5 years, things are not likely to be changing any which way for these companies.
Okay, got that. Devin, hi, good morning and season's greetings to you. May this be an auspicious new Samvat for you and everybody in your office at home as well. So, the space that I wanted to talk about was actually hospitals, because this is one pocket that has seen a very, very strong rally in the market. Numbers have been coming in. We were just looking at Narayana Hrudayal's numbers, for instance, just a while back. And most of them, or even Apollo Hospitals, numbers have been adding up. What would your take be? And would you look at a fresh entry, advise a fresh entry in any hospital stock now?
So, greetings to you as well for the new summer here. Well, I think the hospital stocks are fairly priced. If I have to put across in one line, the potential remains high, and these businesses are remaining extremely capital intensive. So at the same time, we are going to be seeing the larger amount of capital outflows into the investment for creating new bed facilities, new hospitals. And that's where I think majority of the businesses are going to be demanding the money from the investors time and again from now on. So we believe that I think even though on one side these companies are well positioned, they are, but at the same time they are I think very well priced also in the marketplace. So buying immediately into the portfolio, probably I think I would not have enough amount of margin of protection into the stock price. That is where probably one would like to wait and see before the correction takes place in the market. At least in the next 3 to 6 months, we don't see any reason for market to correct into the stocks. But at the same time, buying expensive would be getting a punishment if the market doesn't reward this kind of stories eventually. So we will have to wait and see to buy at a better price so that I think our capital is protected at the downside.
Okay, got that. Devin, one more stock in case it's been on your radar. Manappuram has reported pretty strong numbers. I mean, margins are looking fantastic, right? They work on 15% margin, net interest margin levels. And Abhishek was just telling us that even the non-gold portfolio, that's done very well. The growth is much stronger actually in the non-gold portfolio. So they're clearly diversifying. What do you think of this one?
Well, again, I think from single asset to multiple assets, the journey is on as far as this NBFC company is concerned. Gold, of course, has seen, it is remaining a larger part of the portfolio, has seen a good amount of demand traction in this festive season, which may probably, I think, slow down in subsequent period or subsequent months. I think once we start seeing the slowdown in the spending, particularly I think the marriage-related spending post-February. From there on, I think the slowdown will be seen, at least I think in the gold consumption. Given that situation, given the fact that this company continues to have majority of the portfolio in form of gold at this point of time, so they are diversifying. I would think that stock price has done a good amount of rally at current levels. Maybe the other portfolio which is getting expanded into will take some time before which it gives you the kind of return. At the same time, I think the collection of money in this business has always remaining, I think, challenging. So from that perspective, I think one will have to look at these companies relatively with a higher amount of deposit at the same time. Though currently most of these businesses are generating enough amount of collateral, so they don't have too much of worry. But yes, I think time and again some amount of collection related issues does happen into this business, particularly because of the gold being sold to the rural masses. So to a greater extent, we'll have to wait and see. Maybe the stock price has done a good amount of rally at this point of time. We would prefer to go with other consumer lending businesses which are relatively paying more stronger, with a stronger balance sheet. So we would prefer to stay over there instead of buying Manappuram or any such kind of a gold-focused company which are diversifying at this point of time.
Okay, all right, Devin, got that. Thank you very much for your perspective. Slightly shorter chat today, but we look forward to the next one. You have a great day. Well, let's get to some corporate conversations. We're at the fag end of season, earnings almost over and done, but we do have some conversations for you around numbers. Kaplan Point came out with a good set for the second quarter. The profit was up 25%. Margins have improved as well to multi-quarter highs. The company has a strong order book in the US market as well. To talk about all of these trends, we have Vivek Parthiban, COO at Kaplan Point with us. Vivek, good morning. Thank you for taking this call. I want to start off with the margin profile because the improvement there looks very, very handsome. I think if I have the right numbers, you've gone to about 34%. So just explain to us what went into this margin improvement, if there were any one-offs or any sort of, single product sort of boosters that kind of came in, and whether this level of 34% is sustainable.
Yeah, so we've always been at a good EBITDA number throughout over the last few years. Of course, in this quarter, there was a couple of things that boosted up the numbers. One of them being we started exporting specialty oncology injectable products to our existing markets. Our base business, which involves a lot of these specialty products such as pharmaceutical soft gels, etc., are also contributing well. These are not one time or anything. You also need to factor in Kaplan Steriles' business picking up steam as well. So all of these things combined together, I think you are starting to see that uptick in EBITDA and PAT numbers. I think we would be more comfortable at around 22 to 25% PAT, and EBITDA would be around 35% going forward.
All right. Hi, Vivek. Good morning. And good to hear that you believe that, the margins can sustain at these mid-30 levels. So that's the takeaway from what you said. Now, in terms of the US market, last year, I think you did a fair deal. I think close to around 200 crores of sales from there. At the halfway mark, you're at around 121 crores odd. I think earlier you were mentioning about 300 crores. So tell us about the scalability of the US market. FY24, what do you end at? And for FY25, what are you looking to scale that business to?
Yeah, so US business is definitely picking up steam and we're comfortable with that. But we also need to make sure that there is a fair amount of consolidation that happens at the back end, right? So obviously, this is a culmination of efforts from many years ago. It's not that we've gotten one product or two products approved and that's contributing to the sales. So we have a pretty broad portfolio. But what we need to make sure is the scale up is manageable, especially with a high level of compliance. We've been spending quite a lot of our resources and energy into automating multiple systems, etc. So we think we can do, because of a smaller base, we think we can do a fairly good number this year and next year as well. But I don't want to put an exact figure to it. We will get there because it's a very dynamic space, the US business. But we want a steady growth, I would say, rather than going for a sprint at this point.
No, but it's already up, 23% in the first half of the year. The second half is normally better, right? So in all probability, you should be in the vicinity of 280 to 300 crores. Would that be a fair guesstimate?
That would be the target. Yes, that would be the target. And with our new line also commercialized, you can expect us to go as close as possible. But once again, as is always the case with pharmaceuticals and especially US in general, compliance is always the mantra, and we need to make sure that we're at the top of our game in that.
Okay, fair enough. Vivek, then let's talk about the base business. I mean, Latin America, which is the lion's share of your revenue. Just tell us what the trends are there like. And you mentioned certain oncology products that you're bringing to market. So was that in LATAM? And what's the volume growth? What's the revenue growth guidance that you have, which will help us arrive at, take that to the full year projections for top line overall? How much growth do you expect in FY24?
Yeah, so as you know, we've given it in the past as well. We've been focused on completing our oncology facility that should happen over the next couple of quarters. We didn't want to wait for this facility to be completed. So what we've been doing in the past is registering products using contract manufacturers. So that business has already started now. And overall, company is continuing to do well. Our business model of being close to the customer and making sure that, our unique business model is catering to the bottom of the pyramid. All of these things are continuing to, augur well for us. I would say anywhere between 15 to 17% overall growth is what we are targeting for the overall company.
Okay, 15 to 17% growth for the year, right?
Correct. Yes, for the year.
Okay, all right. So that should roughly be in that vicinity of around 1700 to 1800 crores, I think, by the end of the year is what we're looking at. Vivek, also the cash in the books, well, that gives a good amount of cushion. How do you plan on utilizing that? What's the capex plan for the year? And any other plans, maybe some inorganic growth with the cash you have?
Yeah, so we're not against inorganic growth. We're actually constantly on the lookout. We keep getting some of these things on our table. We need to make sure that it sort of, it grows within our line of interest, right? So we don't want to be stretching our bandwidth too thin and then taking on more than we can chew. Obviously, we are at the fag end of a lot of capex that is going on. And as is always the case with pharmaceuticals, there is a gestation period when the OPEX also starts to come in, so we want to be sitting on a good amount of cash. And we are actually, this is testament to our business model as well. The cash flow that you see, I would say amongst peers, we're probably one of the better performers. But again, like I said, we're not against anything inorganic. I think at some level, as the base starts to grow, this is something for us to genuinely look at, but it has to fit in with our line of growth.
Sure. Anything on the horizon, in the vicinity, anything that you're finding interesting? And also, which segments would you look out for if you're looking at inorganic growth?
So Latin America is continuing to be a very important piece for us. So something, if it is available over there, especially in some of our key markets like Mexico and Brazil, would be very welcome. At this point, nothing advanced. We'll let you know if there is some progress.
Okay, we'll wait up for that one, Vivek. Thank you very much for giving us an idea about the business trends right now. So largely looking good, steady, strong for Kaplan Point. We will take a break on that note. On the other side, we'll have our technical experts join in to give us an idea about the key levels to watch. Likely to be a very strong start. So how does one look at the rest of the day? We'll have Sudarshan and Mitesh joining in.
Welcome back. Hope you're having a good morning. If you're a bull, you'll definitely be feeling quite good looking at the start that we're going to have. So that's pretty good going. But how do you trade from there on? Well, Mitesh as well as Sudarshan join us to help us out with exactly that. Good morning, gentlemen. Well, Mitesh, you go first. Tell us, how do you trade the Nifty from here? First, if you had a long position, what would you do at the start? Would you hold on to it and trade your stop loss? And as someone who doesn't have a position, what do they do as well?
Morning, Nigel. See, for someone who doesn't have a position, difficult to enter after a 220 plus point kind of a gap up. I have been looking at targets of 19, 650, 670. I presume the way SGX is indicating, we are going to open around that level. Maybe you might get an intraday dip post at about 50, 70 points. That would be the entry point. And I would now revise the targets on the Nifty upwards to about 19,850. So in that sense, we'll maintain the long bias. But tactically, I think if somebody doesn't have a position, we need to figure out what's a good entry point. initial understanding is that a 50-70 point dip, if it happens around from levels of 19,650, 670, could be that point. In case we don't see a dip and we continue going up, then I think there's no way to enter. Just if somebody has the position, just trail your stop losses to about 19,590, 585 on this spot, and then look at booking beyond 19,800 plus level. So that's the way we'll approach it.
Got it. Okay. Sudarshan, what about you? Would you? I mean, how do you trade it with this side? It's always tricky, right? Where the market's going to start 200 points higher. How do you chase that opening? Your take?
Good morning. Well, it's not tricky, Nigel, because I have been advocating being long for the last 10 days. Once the trend changes and it becomes a short-term uptrend, we don't fight the trend because the primary trend is up. Now the short-term trend is up, and this is something that I've been explaining every day since the beginning of last week. So I'm not surprised that the markets are, having a big gap up. Obviously, I don't know they are going to do this on Wednesday morning. No one knows that. But if you are inside a trend, sometimes the trend favors you. So for me, it's not a surprise, and people who are listening to me should be having long positions. Now, if you have long positions, I suggest that you take profits on only half and carry the other half. We may see something very interesting tomorrow when the FNO settlement comes. Now, so for somebody who doesn't have any position, if the market has run up, now, after this entire run-up, if you start planning a position, it's a difficult task. But still, if you get an intraday dip, which I very much doubt, if you get an intraday dip, go long. Otherwise, focus on stocks.
Got it. So let's focus on stocks then, Sudarshan. And good on you that you've been advocating that long position for the last many sessions. Tell us the stocks though that you're looking at.
Well, it's an all-buy list today. And we just have to say that the markets will keep on going, hopefully up, at least for the stocks, some stocks. Bajaj Auto is a buy with a stop under 5,300. BPCL is a buy. It's on the verge of breaking out of a trading range with a stop under 380. Cummins has gone coming out of a 4-month consolidation. It's a trading buy, intraday buy, and it's a positional buy. If you're looking to park your money for some weeks, it's an excellent idea. Stop under 1740. And finally, Ipca Labs is also buying opportunity with a stop under 1025. Don't fight the trend. Do not make the mistake of going short. Stay on the long side.
Got it. Okay. Midesh, what about you? What are your individual stock picks?
I also have an all buy list. Very clearly, today is the day when a lot of stocks will see good follow through and breakouts. So Britannia has been just, on the verge of turning the trend on the upside after a good correction. Recommend buying this one with a stop below 46.70. And the targets would be around 47.80, 90 to begin with, though I suspect we can even see higher levels. Then I have a buy on a couple of financial names. Federal Bank made a fresh swing high. So buy that with a stop below 150 half for a target of 159. L&T Finance is a buy with a stop at 142 for a target of 150. And a buy on BEL, which I recommend buying with a stop below 140 for a target of around 151.
Brilliant. Thanks so much for that, gentlemen. We'll touch base with you all in the next few minutes or so, just prior to market opening. For the time being, let's get in Rajesh Palvia of Axis Securities, who joins us on the show. Hi, Rajesh. Good morning. Hope you're feeling good today. If you have carried some overnight long positions, but give us some derivative strategies.
Good morning, Nigel. Yeah, so everything looks on the bullish side. Global cues are on the positive side. The market is holding the put-based concentration in last couple of trading session. If at all, if we open above 19,550, 500 zone, then 19,500 call writer are forced to cover their position, and that can give furthermore upside in the market towards 19,650, 19,700 in the continuation of this pullback. So we are having bullish view at this moment. To play this upward momentum, we are initiating here to buy call option of 19,500 strike that was closed at around 41 rupees. So we are initiating here to buy for upside target of 120, 130 in the continuation of this uptrend. Keep your stop loss at around 20 rupees. For Bank Nifty, it's going to be very interesting to see if at all Bank Nifty holds above 44,000 level in after the opening. Then possibly another round of short covering we can see in the Bank Nifty, and possibly Bank Nifty can show further more traction towards on the buying side, and 44,300, 400 could be the next target for Bank Nifty on the higher side. So Bank Nifty is also looking very interesting at this moment. Those who are already long can keep their stop loss at 43,700 to hold long position. On the stocks front, the Bank of Baroda is looking very interesting. Most of the PSU stocks have done well in the last trading session. Bank of Baroda started recovering from its recent low, and the kind of formation which we are seeing on the daily chart, it shows that now this stock can scale up towards 205 to 210. So one can buy Bank of Baroda with stop loss of 192. Another stock that we like is Tata Power. Most of the power stocks have done well. Tata Power managed to give breakout of its trend line on the daily as well as on the weekly chart. Stock is now trading above 50-day moving average. Looking at the open interest edition, we expect Tata Power can scale up to the level of 268 to 270. One can buy with stop loss of 252. And the third stock is Bharat Electronic, BEL. Very strong breakout on the daily as well as on the weekly chart. Looking at the breakout, we expect this momentum can extend towards 152 to 155. So BEL is also buy with stop loss of 139.
Okay, all right, Rajesh, got that. Thank you very much for all of the trades. Let's see how all of that plays out. We'll take a break on that note. On the other side, we'll, of course, have the pre-opening rates. With this promises to be a strong start. Also, we'll get you excerpts from a special conversation that Prashant had with Mohit Burman, who's, of course, the chairperson of Dabur and also the spokesperson for the Burman family, on the latest with respect to their Religare takeover. More on that in just a bit. Welcome back. Well, we'll be getting our pre-open rates any second now. The expectation is that we start off on the positive side, and one needs to see if banks can start really catching up or not. The implied open, as you can see, is a deep, deep shade of green, as is the rest of Asia. Let's actually pull up some of the Asian markets right now to confirm that context. Most of them were up around 2% the last time I saw. Make that 3% on the Hang Seng. What a roaring rally we've got. Japan's up 2% as well. So is Singapore and South Korea. In fact, I think we can now get you the promised conversation with Mr. Mohit Burman. According to an Economic Times report, 5 independent directors of Religare had accused the Burman family of wrongdoings and fraud as the family looks to acquire their company. Prashant caught up with Mohit Burman, the spokesperson for the Burman family and the chairperson of Dabur India as well, to discuss everything about this rupture with the Religare management, the open offer, and of course he began by asking him about the state of play right now within Religare.
We are focusing on our open offer. We believe that everything is above board, and sooner than later all the regulators will give us the nod to proceed and close the acquisition.
But do you believe that this is now delayed and it perhaps will continue to get delayed because this is now not just about the open offer, but there are other allegations about proprietary, etc. involved?
No, I don't believe so. We're waiting for a CCI approval, which we believe will come in a few weeks. After that, the RBI and RDA, and finally the SEBI. With some of these regulators we already work with, as I'm already into insurance companies, Aviva and Universal Sompo. So I don't think we should have any problem getting the regulators.
So first off the block will be CCI.
Yes.
And then the other regulators will come into play. Do you believe that these allegations and everything else which is happening will impact approval from the regulators? Because after all, this is a financial services company.
No, see, I don't foresee any problem because we're here. We're doing everything above board. I'm here to answer to any regulators. I'm here, to provide them with any information they need. And baseless allegations will continue, mudslinging will continue, but we're going ahead and doing our job.
Just to go back, what caused the disruption, the rupture in that sense, in your opinion? As you said, I mean, you've been long-time shareholders and they were okay. Yeah. But now something went wrong. So that's
everything was fine until the chairperson needed to be voted back in. So of course, at that time she accepted our offer and said that she will help us in getting all the permissions, as well as helping us navigate getting into the business and making us understand the business. As soon as we voted her back in, now she's using all that against us.
But to be clear, did you want her to continue, or did you want when the open offer bit happened? Did you want her to continue as the helm of affairs, or what was the offer given to her? What was the discussion?
No, as far as we're concerned, listen, we don't want to upset the management as well as the board. We are professional. All our businesses are run professionally. Family members only take seats on the board. And even in this case, all our discussions were centered around the fact that at the most, we may supplement the board with some more people, who can add value to the business, and as well as provide capital to each of the businesses to take it to the next level. There was no question about us replacing anyone.
No, but you said right now that when she sort of understood that she perhaps will be voted out, and that's when she kind of.
I mean, if she assumes that, I don't know why, because as far as we were concerned, we wanted a smooth transition, and that's why we voted her back in.
But what was the offer specifically? That, I mean, the executive chairperson position would be held by.
No, there were no negotiations to the to how the business and what positions anyone would hold after the open offer.
But roughly, was there an indication, because she would have gotten an indication from the conversation that you had? So they're just trying to understand. Did you offer her to continue on the board while?
Yes, absolutely. I mean, there was no discussion on any replacement. And as far as we were concerned, we were happy to have her continue on the board. Now, as a chairperson or just as a board member was something which wasn't discussed.
Although, to be fair, there are only, I think, 2 institutional investors. And then there is, you as a large investor, right? So
no institutional investors?
I'm not sure what their status is, in terms of whether they've been asked, they've been denied, or whatever. They were promised but never voted on.
Absolutely. Similar. But
have you spoken to the other 2?
No, we believe, not only the other 2, we believe all the shareholders are supporting us.
But have you spoken to the 2 large institutional shareholders?
Yeah, regular. There's always a regular dialogue.
After this entire thing?
There is a regular dialogue.
And what are they telling you?
We believe that we have their full support.
Mr. Baban, let's just talk about that open offer price. How significant do you think that is in this entire scheme of things, or you think it's gone beyond that? It's not about the price anymore. I mean, if tomorrow you were to raise the price, do you think things can be brought back on track?
We're well above the SEBI price formula, so I don't think it's well with the price. If there's someone else who's willing to give a higher price, then let them also make let them come in the fray. I don't mind. It's not something which we believe we've offered a fair price for the business, and let the shareholders decide.
Are you willing to go up?
Well, at this point of time, no, I'm not.
If this were to stretch on beyond a point, and you just said that, well, you will kind of furnish information and you expect this to be resolved. But if this is not, and it kind of goes on, lingers on, would you be willing to get out of the company? I mean, sell your shares and get out, or is that?
As I said, if the company says that we're not fit and proper, and they find someone else who offers more money, yeah, maybe, why not?
Given everything else which is happening, you think it's likely that we will see the CARE IPO sort of coming through, the stables relegate?
Well, unless the open offer first isn't sorted out, I doubt it will come.
Mr. Burman, just to press on that point, that option that you were talking about, which is calling for EGM and asking shareholders to vote on whether they like the current management at top and whether they'd like a new leader at the top, and why is that not an active topic under consideration?
That's an option you were talking about. But as far as we're concerned, we are evaluating various options. At this point of time, as I said, we're concentrating on our open offer. We're concentrating on answering all the questions that the different regulators have. We believe we've made a fair and above board offer for the company, and therefore we will keep on focusing on that. Other options are there, but as of now, we are not.
I'm just pressing on that option because obviously this has gone beyond just the open offer price with the allegations which have been traded. I mean, it's kind of very inconceivable that you will now be willing to work if the open offer goes through and you get to where you want to get to in terms of shareholding. You'll be able to work with the current person at top, and that's the reason why eventually it will perhaps come down to that. at some point.
Well, as I said, we have various options, and we are being advised by able legal team as well as our merchant bankers. And as I said, we will only look at those options once we have a situation where we need to exercise those.
Okay, well, that is the exclusive, CNBC-TV18 exclusive. Mohit Burman, chairman of Dabur, and of course, spokesperson of the Burman family. The Burman family, by the way, and the stock will come up on your screen, owns a little under 22% in Religare. They're the single largest shareholder in Religare. Mr. Burman telling us clearly that at this stage, there is no plan to increase the open offer price. The focus, of course, even through all of these allegations which are being traded, is to get this open offer through. They filed with the SEBI, a draft proposal with SEBI. There are other regulators involved like the IRDAI, RBI, and of course the CCI. And the focus is to get this through them and basically get another 26 odd percent at the price which they've offered, which they believe is a good price, a fair price. They say they've spoken with other large shareholders in the company. There are 2 large other institutional shareholders in the company. They've spoken with everyone, and they believe that they have the shareholder support. So at this stage, no plans to increase the open offer price. And of course, the other stuff, which is, these allegations, and that they will, of course, have to respond to as and when. As of now, Mr. Burman told me that no regulator has asked him or any other member of the Burman family for any clarifications with regards to these allegations as of now. But he'd be happy to kind of provide information and answer any questions if it actually came to that. You can hear more on this particular interview, more of this interview, because, it's a long-ranging interview about this particular topic, and there are many other aspects to it through the course of the day here on CNBC-TV18. Let's relegate 221 at this point in time. I think we're at the end of the pre-open session as well. To just take a quick look at what the Nifty has left us with. It was a bumper start. 200 points, 19,651. So you are straight away getting back to that almost 19,700 level, which is the 61.8% retracement of the full fall. It's also, by the way, an important swing high for the earlier swing high for the market. So that roughly, the exact number is about 19,693. So roughly about 19,700. But you're going to open within 50 points of that range. Let's get our 9-10 calls out of the way. Mitesh and Sudarshan are with us. Gentlemen, morning. Mitesh, what do you have?
Prashant, I'll recommend buying into Britannia. It's just starting a trend, so it should extend for a few days. Buy with a stop below 46.70.
Okay, got that. By the way, the Nifty now, is practically 2.5%, 3% away from the all-time high levels as well. And if we continue to be around these zones, or this zone, it's above the 20 DMA, the 50 DMA, the 100 DMA. So a lot of important technical levels get taken out. The question is whether we can sustain and really build on that. That would be, of course, the big one. Sudarshan, good morning. What's your call now?
Yeah, good morning. My call is to suggest buying Cummins as a positional buy with a stop under 1740.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's hop across to Abhishek and team to give us the few stocks that we're tracking, the top stocks that we need to track. Abhishek, you tell us about Indiabulls Housing Finance.
Well, they reported their Q2 FY24 numbers, Nigel, and the other income was robust, which has aided in PAT this time around. So the net interest income is down about 46.7% YOY and about 17.8% sequentially. The other income that was at 511 crore, up about 384% YOY and about 421% sequentially. The provisions were elevated this time around. It came in at 257.4 crore. That compares to a write back of 61 crore in the previous quarter and about 226 crore in the same quarter last year. PAT has come in at 299 crore, which is up 2.94% on a YOY basis and about 0.7% on a sequential basis. The spreads have deteriorated this time around, coming in at 3.3% when compared to 3.5% in the previous quarter. Asset quality largely stable. Gross NPA ratio is at 2.88% versus 2.87%. The AUM is at 63,569 crores, so that continues to decline. And the stock has entered F&O ban as well. We have one of the brokerages writing on it. Morgan Stanley has written on Indiabulls Housing Finance. They continue with the underweight call on the same and a target price of 103 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, I'm looking at NMDC, and those numbers are a little lower than what the street was working with. Now, the problem is on realizations, because the volumes, we already had them. though the volumes that were delivered were around 1% lower than what the provisional number was. So that's one factor that played out. Realizations were under pressure, as you can see on the screen. It was down by close to around 700 rupees on a sequential basis. So that's the reason why the margins on a sequential basis as well did see a sharp compression of more than 500 basis points. The good news, though, is that from quarter 3, quarter 4 onwards, these realizations will look up. They've already taken a price increase, and global prices as well of iron ore have moved up because the inventory levels in China are much lower. So the number's a little bit negative. The stock, I think, is opened up with a cut of around 0.5%, Todd. But the street will choose to look ahead because the outlook is fairly positive. But let's focus on a couple of pharma names then. Ekta's with us to tell us about Wockhardt as well as Natco, which is buzzing in pre-open. Ekta?
Thanks for that. Well, both of them are reacting to numbers. So Wockhardt, I'll start with that. Revenue was higher at 753 crores versus 679 crores. Margins have improved to 10% versus 6%, but the company continues to make losses, though it is lower on a year-on-year basis at 95 odd crores, as well as on a Q-on-Q basis. The margins have expanded, plus the loss is lower. Now, for WCK 5222, there is some amount of improvement, there's some amount of progress which has taken place, but maybe the street wants to see a faster progress when it comes to this particular drug which tries to combat superbugs or is an antibiotic which tries to do that. Natco, that stock continues to be in focus on account of benefiting from Revlimid generic. So the revenue was in line. Actually, numbers were in line. 1,031 crores. Street was anticipating 1,061 crores. Margins 44% and profit of around 369 crores versus estimates of around 348 odd crores. So the company continues to benefit from that particular cancer drug. They were the first to launch it in the US markets, and they will be selling limited volumes along with other companies till Jan 2026. They continue to benefit from that.
Okay, Ekta, got that. Thank you very much. We'll watch out for all of these stocks. By the way, speaking of stocks, do keep an eye out on Manappuram as trades opens out. In the pre-open, it's popping 10%, close to 10%. Manappuram numbers look fantastic. Margins have expanded. Non-gold business is shining. Gold business is okay, but it's not grown too much. But anyway, it's a large size of book and it's kind of chugging along. And that's the stock right now in pre-open. The other one is Trident, a smaller name, but again, numbers look very good, margin expansion, etc. So Trident is reacting to numbers. And then there's Kalyan Jewelers. So a lot of these stocks are up and about, all on numbers. And then there are the MSCI additions. A lot of stocks getting added into the MSCI Global Standard Index. And there's still some continued buzz on a macro tech, Persistent, APL Apollo, even in IndusInd Bank, that's the big one. Which is up about 1.5%. Speaking of IndusInd Bank, actually banks in pre-open look solid, and that's what we have to see if we get more follow-through on that big bank trade or not. Right now, most of these names, Axis, etc., are on the upside, as are some of the IT majors. So in pre-open, it all looks great. IT performing, banks performing. Let's see how it plays out. And there we go. We are off with that gap up of 200 points. But to forget the banks and IT, the stock that continues to take your breath away is Coal India, third day running. And it's in pole position on the Nifty, about 1% or so higher up. That's the opening tick, and then it's cooling off now. Hindalco is the other one that's starting off pretty strong, about 2% up there. Then it's IT. It's a good, solid start for IT. Remember what happened to the NASDAQ over the last couple of sessions as well. So 1.5% up on Infosys. There is TCS as well that's seeing some early gains. By the way, the gap up is getting sold into, and this was always the big fear. We are down to about 138, 140 points thereabouts. Let's see what's cooling off. A couple of the consumer names are soft. Britannia, HUL, not doing too much. ITC, not doing too much. So consumers, little soft. But, Nigel, the Bank Nifty, for what it's worth, is looking really good. Banks and IT seem pretty solid, at least for now.
Well, that's right. Some of the big movers in pre-open trade, and in fact, it's playing out as well as expected. The IT index, by the way, made this point earlier. Nasdaq did well overnight. You have the yields that cooled off as well, and the IT index could outperform. That's precisely what's happening. Let's talk about a few more stocks than Ethos. The numbers, I think, came out in the last couple of days, and those numbers look good. So that stock is up close to 7 to 8%. EMS Limited, one of those new listings, has done very, very well from the lows. That stock as well was buzzing in early trade, so keep an eye out on that one. Manappuram, well, the street believes maybe, in fact, valuation-wise, there is some comfort out there. The numbers look fairly decent as well. It came in the closing minutes of Monday, keep in mind. But we're seeing some follow-through buying. So there's a split verdict actually out there. But for the time being, it appears that the bulls are winning. So that stock, in fact, is higher. Trident as well is higher in early trade, so that stock is up and about in early trade. You have Narayana Rudalai. We'll have the management that will be joining us as well in around 10 minutes from now. And that stock as well is opened with a gain of close to around 5% the last time I checked. On the losing end, well, you have Yatra Online. Stock is under pressure. Capacite, well, that stock as well is under some pressure, reacting to numbers. And Vocart is the other stock that has taken a bit of a knock. So just keep an eye out on that name as well. But by the way, take a look at some of these mid-cap IT names as well. Emphasis is flying away. That's up close to around 4%. The metal index as well is doing well. And that normally happens when you have lower yields. Tech as well as metals, both those global-facing themes, they do relatively better. And that's what's happening. Prashant.
Well, it's green all over, and 165 on the Nifty, 19,600 plus is where the index is at, and it's looking very, very good so far. Just a few other names, I think some overlap with what we've already mentioned, but Manappuram has got the largest volumes across the board with that 7% gain. The largest volume-led gainer is Manappuram right now, 150 is where we're at. Suzlon is up about almost 5%. So there is that MSCI inclusion, and we'll kind of go back to Vivek to talk about all of those names and what's happening here, happening with those names. CAMS is up about 5%, 2,800 plus on CAMS. So that's looking very good. I think Nigel mentioned EMS, which is up 10%. EMS had a bit of a swing sharp crack, but it's come up in double time. It's recovered and kind of gone back, above the prior highs very quickly. Jayaprakash Associates is up about 4%. There was, a partial settlement with ICICI Bank actually the news came yesterday. We'll have more on that in a little bit. It's done very well. I mean, basically, from the first time that we reported that this was under the works with ICICI Bank, the stock was at $12. It's at 20, so it's done very well in short order. Narayana we mentioned. Emphasis, I think we mentioned. What else? Ethos. Ethos is up 6%. Luxury watches, 2050 on Ethos. And that's a big pop which is coming through out there. Phoenix Limited is up 10%. Straight off the bat, 2,300 on Phoenix. So retail, luxury, everything. I mean, that's the pack which actually you want to focus on. And that is doing very, very well. 1,600 stocks are higher, by the way, and you only have about 300 stocks which are down. And I think we already mentioned a fair bit in terms of what is lower. Capacite Infra is down about 5.5%. NMDC, I think we mentioned, which is down about 4% or so. I mean, there's not very much on the downside. As I said, it's largely all green out there.
Absolutely. Just two trades I wanted to point out. Mid-cap banking is a very clear trade today. PSUs and even some of the private sector names. Yeah. Look at Yes Bank. Look at what's happening to this one. 4% up. A little unusual for Yes Bank to be popping 4.5% so early on in the day. And then there are the PSUs, Bank of India, etc., all up and about. There's RBL Bank, there is J&K Bank. So in general, tier 2 banks is one very clear trade right now. And so is metals. Industrial production numbers are out in China. They came out about an hour and a half back, and the numbers are looking good. They're better than expected with the growth of almost 4.9 to about 5% on industrial output in China. Seems to be helping the entire pack, Hindalco, Tata Steel, the likes.
There's also that meeting, right? President Xi, China is meeting President Biden. Yeah. And it seems to be, and it's of course, China, the equity market in China is, of course, completely bombed out and has done very poorly relative to other parts of the world. So there seems to be a confluence of things there. But it shows up in terms of what the metal pack does here. Manish Sonthalia is our market master today. He's CIO at MK Investment Managers, and he's joining us now to take some questions. Manish, good to have you with us here. Thank you very much. Maybe stretching the point a little bit, but maybe not that much, because the previous highs are about 3.5% away. Do you think we have a clear path now for a decent rally all the way into the end of the year? What's your sense?
So there is a confluence of positive and negative factors, both emerging from the global front as well as the domestic front. I mean, right now on the domestic front, we have the state election results coming out on 3rd of December. I mean, that's one hiccup that the markets need to overcome. But clearly on the positive side, US interest rates look like having peaked off, given that inflation has cooled off very, very sharply. In spite of the Middle East tensions, you have oil at less than $80 per barrel. I mean, that's all positive. So I think given the confluence of the positive and negative factors, we would likely have a range-bound market between, let's say, 19,000 to 20,200
on the Nifty. I mean, that's what looks like, plausible in the near term. I mean, it could be till about the end of the financial year, or could be, slightly lesser than that. But clearly, till about December, this seems to be the target.
Okay. Manish, hi, good morning. What are some of the big themes? I was looking at the portfolio that you folks have, where you're looking at, I think, mid-cap and small-cap stocks, the emerging giants sort of theme. And quite a few interesting facets are out there. I think digital is one thing that you're looking at, then you're looking at financialization. So a couple of these mega themes that you're playing. Let's talk about digital. Nykaa, by the way, on my screen is again up about 1% or 2% thereabouts this morning itself. Now, in digital, given that stocks are beginning to rally back, numbers are also looking good, what kind of themes or what kind of companies are you tracking and liking?
So in digital, I think consumer tech space, you have a few companies out there. I mean, those look like having reached an inflection point where there is a non-linearity that is coming through. I think these stocks can move 2x, 3x from these levels. Artificial intelligence is one big theme that is set to rule the world in many years out. The game has already started. Indian IT companies will also stand to benefit out of this. You have some small companies, of course, the valuations are not very palatable, but the growth seems to be coming through good, and we'll be looking at some of these companies. So I think artificial intelligence, consumer tech, married with retailing, these are some of the names that we would be looking at in the digital space.
So you mentioned artificial intelligence. We don't have too many pure play entities that are like right at the forefront. So are you suggesting that you look at some of the existing IT large cap names, the big IT boys, and perhaps play AI through them, or how would you look at it?
Before artificial intelligence becomes mainstream, there would be opportunity both in the mid and small cap space. Many of these companies will get created outside the mainstream IT companies, and as like in the cloud computing space, they got integrated into mainstream IT companies only after a while. So similar is the situation which we are likely to see even in the artificial intelligence space. A lot of work is happening, and I think a few of these names in the portfolio, and there are a few of them in the listed space as well. Since we are creating the portfolio, we can't talk about individual names, but these would be emerging companies, not the mainstream IT companies that we would be looking at currently.
Okay, all right. Hi, Manish. Good morning and good to see you. And, I recall the last time we chatted in a few months or so ago, you were talking about the pharma pack. And if I remember correctly, you were telling us that, Gland Pharma, that was just an example that you cited, maybe all the negatives are in the price. The stock from there is up more than 40-50%. What's your take on the... 100%, is it? All right. I thought it was around 950 odd, or 1,000 rupees. It's actually 1,600. So, okay, 100% up from there, so it's doubled. So what's the outlook with regard to, say, Gland Pharma and various other pharma stocks? The index on the whole didn't perform for a couple of years, but now it seems it's back. Your take?
So, I mean, as I had alluded that time, it is a classic case of a stocking and a destocking. And if you have seen this quarter numbers for all pharma, the entire pharma pack as a whole, they have shown some very good numbers, both on the domestic pharma side as well as the generic export side or even injectable export side. I think normalization post the COVID is happening. You have lesser price erosion, competition, thanks to capacity rationalization happening globally. I mean, and even in India. And I think, valuations as opposed to many of the sectors in the market are quite reasonable, so to speak. And these companies are fabulous businesses for the long term. So from that point of view, I think I am still overweight pharma even at these levels. And I think both, there will be pick and choose within the pharma pack, but specifically talking about, let's say, Gland Pharma or an Ipca or an Alchem. I mean, these are, or a few others as well, Mankind, etc. These would be very good picks even at current levels, given the longevity of growth on the farm on these names. And I don't think really the valuations capture entirely the positives that are available on these names even now.
Got it. Manish, any thoughts on We, by the way, played out a small snippet of our conversation with Mohit Burman. Burmans are the single largest shareholders in Religare. A lot of hopes, of course, on Religare. I think your previous organization is one of the large shareholders in Religare. But any thoughts here? Because the care healthcare business, but of course there is now this corporate battle brewing, which may elongate things in terms of how all of this will play out. So it's not so straightforward anymore. Any thoughts at all?
So I think the equation is very simple out here. The entire thing is about, the entire upside in Religare is about the growth that you're going to see in care health, right? And whether it's going to be vertically demerged or whether care health goes for a listing. Now, I think the open offer is still on, and I think given the growth in care health, this whole tussle about who is going to regain control of the entity, the holding company as a whole, is what going to decide how far Religare can move in the medium term, so to speak. I mean, short term is all we know is there are news flows that are there where there is a struggle to by two parties to regain control of the holding company. But in the course of time, I would believe that once this whole thing gets sorted out, it's going to be about where there is going to be a vertical demerger of the care health business, the NBFC business, and or whether it's going to be about listing. In that case, the holding company is likely to see a holding company discount. So the best situation that is plausible for minority shareholders would be a vertical demerger instead of a listing of care health. That is going to be the best possible situation for minority shareholders. And that would broadly be the outcome of the struggle that is there now between the two parties. The Burmans who want to have control over Regain would be the majority shareholders, or whether it's going to be the other side where it's going to be a likely listing of the health insurance business. So I mean that is where the situation is currently.
Okay, got that. By the way, metals has become the top trade on the large cap index now. Look at this. Look at Hindalco fly 4.5% up on Hindalco. Tata Steel, JSW Steel, all of those stocks are stacked up over there. One of the best performing sectors of the market this morning. Manish, energy transition. Again, I'm going back to that one pager on your portfolio and some of the themes that you're tracking. Again, not too many direct listed plays here in India, but this is one company really spearheading energy transition. Though a lot of conglomerates are doing it overall. I mean, we talk to Tata Power, they tell us that renewables is their key focus, even though there's a lot of chatter on thermal power capacity right now. So how would you play this energy transition theme?
So, Surabhi, I mean, energy transition and moving away from fossil fuel to green energy is a fact now. I mean, it's no longer, if and but. Given that we want to reduce our dependence geopolitically on fossil fuels, that is one aspect which is in favor. There's technology advantage which is in favor, the cost advantage which is in favor. So all of these things would mean that right from production, generation, transmission, distribution, till consumption, the entire value chain will see very large growth between now and 2030. And there are a lot of plays in the energy transmission space. And I'm alluding to the fact it's not just the production companies when we are talking about wind power generating companies or solar power generating companies, but somebody who is going to be making the module, somebody who's going to make the glass, somebody who's going to, let's say, make the cables, the conductors. And let's say there are companies involved in electric charging stations. We are also looking at battery electric storage. So this entire space is buzzing with activity. And there will be many companies which are very small currently, which will become giants in the next 7 to 10 years. And that is why we're targeting this space. It's no longer if and but whether energy transition is on us, but it is on us. I mean, and there are a lot of plays. You're already seeing some of the numbers that are coming through. The outlook, the visibility on earnings seem to be quite good. So, I mean, I would believe that this is one of the space which will do quite well.
Okay, all right. Manish, always good hearing your thoughts. Thanks so much for joining in and filling us in with your take. Wishing you a good day ahead. Well, let's focus on Narayana Hridalaya. Well, those numbers look very, very good. To discuss this and more, we are joined by Ms. Sandhya, the Group Chief Financial Officer of the company, who joins us on the show. Hi, ma'am. Morning. Thanks so much for joining in. Well, the company has shown consistent improvement in margins. Now it's at around 23.5% odd. What's leading to this improvement? Is it cost containment or is it better surgical revenues, which is aiding the ARPOB? Could you tell us what helped it and what's the outlook on margins going ahead?
Good morning. Thank you for having me here. It's been a mix of both the aspects that you spoke about. There is definitely improvement in the surgical mix. But I do want to say that a lot of it has come because of digitization, improved throughput, and cost rationalization. So if you would see our revenue growth profile over the past, say, 8 or 10 quarters, you would see that a lot of it has been achieved without a significant growth in the average revenue per patient. That's because we have always been very, very conscious of our price point, and we have kept our price increases to the bare minimum. We have not passed on costs to the patients, and we have tried to work from a technology and efficiency point of view. Now, some of that has started reflecting into the performance, and therefore you are able to see the improvement in EBITDA. Having said that, we don't guide into the future. Definitely, we will continue to keep working on cost. The only call out I will have is that there is a continuous headwind that healthcare keeps facing, like we've spoken before. In addition to inflation, there are also government actions that get taken, like price control, etc. When we are hit with such headwinds, we don't pass immediately the impact of the headwind to the price, but instead we work on it and work on efficiencies and costs and throughput, and that's how we try to counteract these headwinds. So to that extent, there will be a lag in our margin catch-up. Overall, yes, this has been cyclically a good quarter for us.
Sandhya, hi, good morning. I remember the last call, and I think I might have been on the show, and I think it was the Q1 call, and you said categorically that you're not going to be chasing price growth. It will be all driven through internal efficiencies, and that's exactly what you've delivered in the second quarter. So can you just clarify this improvement in margin? You're at about 23% now. That's entirely through the efficiencies and cost rationalization. There's been no price hike. Are you planning a price hike at all in the second half of this year?
There has been no price hike. In fact, we don't take up prices during the year. What we do is, at the beginning of the year on 1st January, we publish our prices on our website, and that's the price for the rest of the year. Under very, very unusual circumstances, we may take up the price, but we have never done that.
So, okay, now that we are in, sorry to come in over there, I got that. So now that we are in November, my logical question has to be that given medical inflation, given the trends that you're seeing across your peer set as well, as you're looking at the next year, give us some thoughts, at least on pricing, if not the exact number that you're looking to take.
We are working on that, actually. There has been a significant inflation, that's a fact. So we are working right now on how much we can counter through our own efficiencies, and if we really need to take up a price increase, and if then how much. So 1st January is when our price increase will be. So when we speak next quarter, I'll be able to give a more firmer view of the range of the price increase we may have to take.
Sandhya, hi, good morning. Typically, but and it'll vary across sort of various disciplines and various departments, etc. But what is the price increase, blended price increase that you take every year?
Very low single digits. That's what we took last year and the year before. So that's been the range at which we've taken price increases.
And you think, without going into specifics or anything, it should be what in the range of what you've done so far in terms of hikes?
Yes, that's how we are aspiring, but we're still doing the numbers right now, so it's too early to comment. So if you can give us a couple of months, 1st January, it will anyway be on our website, and when we speak next, I can share more details.
Okay. You said there were some government actions sometimes which hurt. Is there anything specific you were referring to with regards to anything which has hurt your business? Or was that a general statement?
Action. We have not had a specific large action. but periodically government keeps looking at various prices, and there are price caps which keep coming. So in the short term, where you have fixed contract, it becomes difficult to adjust to these price caps and other interventions that come from the government.
Got it. All right, Sandhya, what about, the HCG, Healthcare Global? There's a big PE in there that's apparently looking for an exit. Have you all looked at that asset at all?
I don't think I think we have always shared our strategic plan very clearly. We have wanted to build. We've built a very strong portfolio of services, and we are doubling down on our capacity, our strength, and we look at inorganic assets from time to time opportunistically. Now, that's all I can comment at this time.
But have you looked at this asset? We get that you'll have made a strong foundation. You could look at various assets. But is HCG something that could fit into your scheme of things?
So our oncology business has picked up reasonably well over the past 2 years. We now have one of the largest bone marrow transplant capability in the country. We do the largest number of pediatric bone marrow transplants in the country. We also do a significant amount of work on oncology. So I think we have a strong business we are building on. So we would focus on building our business.
So you'll focus on it organically. That means you're not interested in HCG. Is that correct?
I don't know whether it is fair of me to comment whether we're interested or not. I can only comment on what we're doing right now, which is building our business.
Sure. Got it. Just thought we'll quiz you on that. Also, you all have plans to get into the insurance business, right? What's the update out there?
So we have applied for our license with the IRDA. We are going through the process. We are hopeful that once we are able to satisfy the IRDA that we deserve the license, we will be able to get the license. So I can only say that it is on track. But it's a time-consuming process, and we are going through the motions.
Okay, Sandhya, leave us with an outlook in terms of capacity addition and also the newer hospitals. What are the sort of timelines, for instance, break even for the Mumbai hospital, the newer facilities? And how many beds will you be adding in the second half this year? And also, if you can give us some outlook for next year.
We are not adding any significant number of beds for the next 2 to 3 years because a lot of our capex plan is on building greenfield capacity across our flagships. So our next set of big capacity increase will come in a span of 2 to 3 years when all these greenfield facilities are commissioned. Having said that, we will have like a 10-bed addition, 50-bed addition. There is one 2-floor expansion we are doing in Calcutta. So all of those small additions will keep coming from time to time. Like I had mentioned before, we also opportunistically keep looking at inorganic options. And if there are something that fits in our scheme of things, that may cause some bed additions, but really the significant bed addition will come only in 2 to 3 years' time. However, we have enough headspace to keep growing until then, and we want to keep pushing our efficiencies to be able to reach that targeted growth.
Okay. Well, Sandhya, we'll leave it there. Thank you very much for joining us. Great speaking with you. Appreciate you joining us here on CNBC TV18 as always. Well, that's Narayana Hrudayalaya with commentary on what the future looks like. Price increases from the 1st of January, as they always do. Low single digits is what we should expect. But of course, the specifics in the next couple of months. We'll take a quick break here. We'll be joined by the management of Kalyan Jewellers. That's the other stock which has done very, very well. We discussed the performance for the quarter gone by. A little after that, we'll have the management of PNB Housing Finance to discuss their second quarter numbers as well. So it's power-packed. Stay with us. Welcome back. You got 180 points on the Nifty. We are at 19,626. So this is as strong as the GIFT Nifty was promising us before markets open. And it's largely in line with what the rest of Asia is doing, etc. So very, very good session out of a holiday. Well, Kalyan Jewellers is the next company which we said we'll have on the radar. So they reported a strong set of second quarters. India revenue jumped 32%, whereas the Middle East revenue grew by 13%. The company also added 13 showrooms in the second quarter in India. By the way, the stock at Kalyan Jewellers stock, what a year 2023 has been. It's up 170%. I mean, even for a sector where other jewelers and their stocks have done well, Kalyan, I think, stands out head and shoulders above the rest. We have Mr. Ramesh Kalyana Ramanan, who's Executive Director, Kalyan Jewellers, joining us now to take some questions. Ramesh, great to have you with us here. Good morning. Prashant this side. Congratulations on a good set. I just want to start by asking you, what is the same-store sales growth in the second quarter, and how much of it was outside of the south of India?
So yeah, same-store sales growth was in the range of 10%, and South was around 8%, and rest come from the non-South markets.
What is the situation now, Ramesh, since we are in the middle of the third quarter? What is it tracking at?
As we speak, the revenue growth is strong, momentum is strong, footfalls are good. We see high traffic in almost all the markets across India, and SSG has been healthy. And we had updated that the revenue growth is around 35% consol for the first 43 days in Q3, India being more than that.
So same-store sales growth in the third quarter, third quarter I'm assuming would be the best, right? Seasonally as well, October to December.
Yes, Q3 is good in the non-South markets, but the base is also high last year.
So it'll be comfortably above the 10% growth that you posted in Q2?
You are talking about SSG or the revenue?
Yes, SSG.
No, SSG, the base was high. We always look for an SSG of around 5 to 6%. We are also adding stores near to our own stores, wherein if you look at all metros, we are adding many number of stores now. Of course, on the ground, the SSG is very strong. We recorded 15% in Q1, 10% in Q2, but 5 to 6% is what we usually target for. Or guide for, but on the ground, it's higher.
Okay, got that. Ramesh, hi, good morning. Now I can speak to you as a customer in the gold market, since I was out there not too long back. Competitive intensity, that's what I want to talk about, because the organized jewelry market is now really growing. And at least in some of the bigger metros, customers will have a tendency to go shopping for designing, and looking at costs very, very carefully when it comes to those making charges. So you tell us what that is translating into in terms of, business trends for you. There was some compression in the margin this quarter compared to the same time last year. So what is competition meaning in terms of your plans and overall margin profile?
The margin degrowth, I will clarify first. The margin degrowth which you see in Q2 versus last Q2 is predominantly because of the franchisee revenue climbing up. On the ground, the gross margin at the store level has been very steady. And competition has always been there in the sector. And what is interesting is that the amplified shift in demand from unorganized, that is also increasing day by day. And EBITDA margins are coming down only because of franchisee revenue increasing.
Okay, so otherwise there is no issues with respect to competitive intensity. Again, since we're on the margin subject, let me ask you about the difference between studded and non-studded. When typically as the share of studded goes up, margins improve. What is your target, say by the end of this year, between studded and non-studded mix?
No, studded, if you look at our studded revenue, it is increasing and it is in the range of 29%. But again, it is predominantly because we are adding more stores in the non-South region, and those stores are all franchisee stores. So even if the studded revenue increases, EBITDA margins will keep on coming down because our fresh revenue from new stores are all coming from franchisee, which comes with a lesser growth margin. Focus now, according to me, we should shift to PBT, to PAT, rather than EBITDA, because we are moving into a franchisee mode. So franchisee PBT is higher than our own store PBT. And in a usual circumstance, the PAT margin should be more than our revenue growth. So that is how we should look at it.
Okay, got it. Thanks for that clarification, Ramesh. Give us a few more details. You know, there was an asset that was the sale of plane. You had marked this asset for sale. Has that deal happened?
So the deal has happened, but the money has not come in. Maybe before the end of Q3, that money will come in. And
how much?
We are just waiting for the net of tax will be 100 crore.
100 crores.
That's the money which will come in from the sale of asset.
Got it. So that money comes in, and I guess it'll be used for debt repayment. What should your debt number look like, say, by the end of FY24 and FY25?
Yeah, so rightly said, debt we have already, if you look at, we have reduced our debt by what, 115 crore in the gross level. And we have a debt reduction plan for this year. We will at least reduce 15% of our gross debt in this financial year, which will be aided by internal accruals, as well as the money which is coming in through the sale of aircraft will also go into reduction of debt.
So we have the debt around 3,400 crores. By the end of this year, given that you're going to get money for that plane and plus the internal accruals that you'll have, so it'll come down to, say, around 3,100 by the end of the year?
It should. Yeah, it should.
At least 3,100. Could even be lower than that, right?
Yeah, so with the buffer, 3,100 is what we should look at.
Ramesh, just to go back to on the diamond side, I think we've seen a fair bit of price deflation, right? Prices have come off very sharply. Some are attributing that to, at the margin, maybe lab-grown diamonds and things like that, maybe just cyclical. I'm not sure. Just can you talk to us about that? I mean, how is that likely to play out, and any impact on your business, other companies, in terms of inventory losses, etc.?
Not really. Actually, only in solitaires, and that too in a couple of categories, which is high size and a particular quality. The price has come down on an international platform. Okay, and if you look at our revenue, 95% of the revenue are non-solitaire. Rest of the 5% revenue also, this category is very minimalistic. So we don't have to budget for any lock in inventory, is what I will suggest.
But overall prices have come off very sharply since we have you, Ramesh. I mean,
only solitaires. Only solitaire in a particular category has come down. Okay, internationally there is a lot of talk, but reality is that only a particular quality in the high-sized solitaire, the price has come down.
Gentlemen, that's your cue. I'm sure people at home are watching.
I knew something was coming.
I knew it. Okay, Ramesh, very, very quickly. Two-part question. Can you, A, sustain this top-line growth of 30% plus? Is that number sustainable? Because the market really took note of that. And second part to that question is, as the share of franchisee stores keeps growing, and you mentioned that's having an impact on the EBITDA margin level, at least at the EBITDA line, what could that EBITDA number come down to? Is 7% sustainable as the share of franchisee stores grows, or could it dip below 7%?
So you know that our expansion is completely now taken care by franchisee, which will be the case for the next 2-3 years. Now, as we speak, 20% of the revenue is coming from franchisee stores. And in, say, a couple of years, it will come to around 50-50. At that point in time, when it is 50-50, the EBITDA margin should be in the range of 6.5 to 7, because our own store EBITDA margins are 8% and franchisee stores EBITDA margin are around 5%.
Okay, so margins should come down, blended margins, then therefore comes down to 6.5 to 7%.
But again,
got that.
PBT,
and
again, PBT.
I got that point. Got that point. 30% top line growth sustainable?
Ideally, meaning I cannot give a guidance, as you know, but as we speak, for the first 43 days, the revenue growth is around 35%, which is very high. And we are keeping on adding stores. This year, again, we will add maybe 9 stores in Q3 and around 12 to 15 stores in Q4. Next year, we will open 80 new showrooms, and which is going to take our top line strongly upwards. And again, SST is also strong as we speak. So hopefully, what it should sustain.
Okay, should sustain. Got that. Thank you very much for joining in. Good luck with your business plans. That is Kalyan Jewellers at the end of the second quarter. Quickly moving on to the next call then. PNB Housing Finance is in focus. Disbursements were up about 13.5% sequentially, but that did not translate into very strong AUM growth. Write-offs did aid NPA improvement. During the conference call, PNB Housing also said that it expects the second half of the year to be better. Girish Kausgi, MD and CEO of PNB Housing Finance, is with us. Mr. Kausgi, thank you for joining in and season's greetings to you. So let's first start with the AUM trends. Can you tell us, give us some color on how the quarter played out and what you're expecting in terms of AUM growth for the second half?
Good morning, Sumri. In fact, if you look at the last 1 year, we've been trying to transform the company. We've changed the business model. So if you have to talk about 1 year back, the growth used to be little negative or almost flat. So if you have to compare that with the quarter two on a YOY, the book growth was 12% and disbursement was 18%. So I always say that, it will start with disbursement and then the catch-up happens on the book. So this year we have guided 17% growth on book. So we will catch up in quarter three and quarter four. I think our guidance is in line. So I think it was a very good quarter. We were able to reduce the GNPA both on retail and corporate. Margins were maintained, a good growth in revenue, in net interest income, PAT. I think all the parameters played out very well for us in quarter two. It was a great quarter.
You said 17%, 17% AUM growth target for the current year?
Yeah.
Okay, and you're confident of achieving that, going forward?
Yeah, as of last quarter end, we were at 12% growth on book. So we need to catch up 5%. So in next 2 quarters, that's quarter three and quarter four, we would get to 17% growth on book.
Got it. Hi, good morning, Mr. Kausgi, and thanks so much for joining in. Well, some on the street believe that maybe you're a little bit aggressive in terms of your target, but we take that point. You are believing that 70% is possible. So maybe by the end of this year, you'll be closer to that number. The other aspect is, you're looking to restart your corporate segment, right, in the next few quarters. As of now, it's relatively small, and that's been a bit of a pain point. So could you tell us what could this segment contribute, and what is the growth you're forecasting there?
I think now our focus is completely on retail, so much so that we launched affordable business called Roshni about a year back. I think now it's almost close to 1 year that we have opened 100 branches. And in the next 4 months, we'll be opening 60 more branches on the affordable and 27 branches on the prime side. So currently we have 100 on prime, 100 on Roshni. So this 200 will go to 287 in next 4 months. So we are pretty much aggressive on retail, and affordable is really gaining good traction. As of September end, we reached to a book of close to 750 crores. And probably, hopefully, this quarter we should be able to hit 1,000, and we'll be one of the fastest, housing finance companies to reach the first 1,000 AUM. Now, on corporate, it was a conscious call to degrow the book because we saw some stress because of certain calls which were taken in the past. So we have corrected that. We worked on resolution. We ran down the book from almost 18,000 crores to about less than 2,400 crores as of last quarter end. And the GNP also has come down. So we have planned to start, which is about 2-3 quarters away from now. But when we start corporate, it will be in a very small way, in a different format. Focus would be on only construction finance, focusing on select developers, select projects in select cities. I think that's a plan. So if we look at the overall portfolio, at any given point in time, the corporate book would be less than 10%. And the rest would be retail, which would be again, a split of prime and affordable.
Okay, so corporate book would be under 10%. Focus is on retail, and maybe what you will focus on the corporate side is basically construction finance, etc., as you said. On the branches, you said in the next 1 year you will get up to 287. You said, right? You're at 200
March.
right now.
Before March, another 87 branches in next 4 to 4.5 months.
Got that. And 60 out of that, the new branches on the affordable side. Got it. Mr. Kausgi, just talk to us about NIMs. Spreads came off in the quarter. Cost of funds were higher. Are you still maintaining that 3.5% NIM guidance for the full year? And how will you get to it? What's the mix in terms of cost of funds?
So actually, if you look at our spread and NIM, it's around 2.6 and NIM is about 3.9, 3.95. Even last quarter NIM was 3.95. So I think it should be, on similar lines for next few quarters. However, the long-term guidance, on spread is 2.5 and NIM is about 3.5. I think that is sustainable. Today, if you look at, we are 45 bips higher on NIMs. I think next few quarters we'll be able to maintain that. In terms of cost of funds, I think it is coming down marginally. For last quarter on portfolio, it was 7.99 and incrementally also was almost similar. And going forward, we expect the cost of funds to come down because of 2-3 reasons. We have been engaging with all the bankers to reprice the rates on the lower side. And this year onwards, we'll have access to NHB funds, which will come at cheaper rate. And depending on the performance, we've been engaging with rating agencies. Couple of agencies have revised the outlook, and we are expecting a possible upgrade in next couple of quarters. So all these things will bring down the cost.
Okay, all right, Mr. Kosky, final question before we let you go. Tell us about the asset quality. How do you see that panning out? If you could give us a couple of numbers and credit cost as well.
So in terms of asset quality on the corporate side, we are more or less done because now it's less than 3%. We have one account in NPA, which is 68 crores. And we are working on resolution, hopefully should get resolved before March. So on corporate, our GNPA would probably be nil by March. On the retail side, we've been pretty aggressive on various legal tools, including cash collection. So I would only say that we're really doing a great job in terms of containing the flows. So every quarter, we would see that GNPA on retail would keep coming down. There is no guidance for that, but in next probably 3 to 4 quarters, our GNPA at an enterprise level would be comparable with some of the best companies in the industry. On credit cost, this year we had guided for 60 bips. Quarter 1 was 36 bips. And quarter 2 was 26 bips. I think largely 36 bips and 26 bips was for ECL true-up. We wanted to really increase the PCR, but in terms of actual credit cost, it has been much, much lower than that. So this year, the guidance remains at 60 bips. From coming year onwards, it will be 40 bips.
Okay, Mr. Kosky, we'll leave it there, sir. Thank you very much for joining us and running us through all of that detail. Good luck as you continue to drive that business and drive that turn. Well, 190 points on the Nifty is what we have. 19,635 is where we stand right now. It's looking pretty good. I think we got a new listing coming through as well. ASK Auto is listed at a price of 309. They issued, the IPO price was 282. So the listing has happened at a premium as compared to the issue price. So that's the latest addition to the listed universe as it comes through. The pace of listings, I mean, new IPOs and listings have kind of fallen off a little bit, but it's picking up once again over the last fortnight or so. I think last week we had 2 or 3 listings. This week, I think we are on track for at least a couple. So that's the newest kid in the block right now. 3:1 is the advanced decline ratio. 1,600 stocks are higher. You've got about 500 stocks which are lower. And what we'll do is we'll take a quick commercial break here. We'll come back and touch upon some of these stocks which are buzzing around. Nitesh will also be with us to run us through what are his fresh trading ideas. Stay with us.
Welcome back. So the markets managed to retain its gain. There was that minor dip immediately after open, but then it kind of got bought into. So it's quite steady right now, almost 190 up on the Nifty. We've got Mitesh back with us. Mitesh, it's been a good start to trade. What's the advice now?
It's been a very good start to trade. I think, while we are slightly off the opening level, but I think the fact that, after such a big gap of opening, some kind of profit booking was expected. I think that's happened. And then the buying has re-emerged at lower levels and we've kind of bounced back from there. So I would maintain a positive bias. I talked about 19,650, 670 as the range where some supply can happen. I think what we have done is that on the index, we've taken profits off a little bit. But on the stock side, I think a lot of stocks are still showing good breakouts, which, possibly could see nice gains happening in the coming few days. So we're trading with long bias. But tactically, I think, taking some profit on the index was part of the strategy because you had some long positions at slightly lower levels. Right now, I have a buy on Tech Mahindra, and disclaimer that it's been a recommendation to our clients already. So there's some vested interest, which I would recommend buying with a stop below 1150 for targets of 1200. And a similar case I'll make for RBL Bank, which also has been recommended to our clients, but now can be bought with a stop below 245 for a target of around 265.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, I'm focusing on a few names. On a day when the metal index is doing very, very well because of the overnight queues, NNBC is under pressure. That's because the numbers are a bit of a mess. Remember, we already have a cheat sheet because volumes are already with us. But in comparison to the provisional volumes, well, the volumes are 1% lower. The problem, though, was on realizations. And the realizations came in lower on a quarter-to-quarter basis by close to around 700 rupees. And that was the pain point. The good news is, though, realizations will look up from here on because they've taken a price increase. International iron ore prices as well have moved up. So there should be some kind of positive rub-off. But the margins compressed. On a sequential basis, they were down close to around 500 basis points. And that's the reason why we saw a bit of a miss on that front. So all in all, these numbers go down as a miss. As I've been saying earlier as well, from this quarter on, realizations will look up. And that, in turn, will reflect in the profitability. But let's talk about Manappuram. That's one of the big gainers. The results came late on Monday. And today as well, it's seeing follow-through buying. Abhishek joins us to fill us in with the key details. Abhishek?
Well, to begin with, Manappuram, they have beaten on our poll with respect to NI and PAT because of the fact that non-gold portfolio growth is really strong. So the overall AUM growth is about 27% YOY and about 5% sequentially. The gold loan share continues to decline for them. So gold loan share is right now at 53.4% when compared to 62.6% YOY and about 55.6% quarter-on-quarter. The non-gold AUM, that growth is really strong. The share has increased to 46.6% when compared to 37.5% YOY and about 44.4% quarter-on-quarter. So the yields are super impressive for them for second quarter in a row. Calculation shows that the net interest margin has expanded by 21 basis point on a sequential basis. Analysts were working with a net interest margin expansion of 5 to 10 basis point. So the NII is a 7.5% beat on our poll. It has come in at 1,467 crore. We're working with a number of close to 1,365 crore. The other income has largely remained flat on a YOY basis. The PAT has beaten our poll by about 8.5%, coming in at close to 561 crore. We're working with a number close to 517 crore. So we have brokerages who have written on Manappuram Finance. BofA Securities has a buy recommendation and a target price of 182 per share. They say that, the company actually trades at FY25 price to book value of just 0.94x, while their 5-year average is about 1.4 times. This undervalues the underlying strength that they are seeing in the non-gold portfolio and improving MFI yields. MS has also written on Manappuram Finance. They have an overweight rating. The target price has been increased to 200 per share from the earlier target price of 183 per share. They said that there is upside risk to earnings and more to valuations multiples going ahead for Manappuram. Back to you.
Okay, got that. Thank you very much. For the details there, Manappuram doing really well, Abhishek, with the latest. Speaking of stocks that are doing well, look at Ethos. It's a high flyer, almost 9 to 10% up right now. So quite the mover. Let's go across to Manglam and get more details into the numbers. Manglam?
Well, if there's any gauge of India's luxury market and its resilience, it's definitely in Ethos's numbers. Quarter after quarter, the company displays extremely strong revenue growth. A large part of that, of course, is led by the increasing average sales price of their watches, which are now closer to almost 1.7 lakh rupees per piece. 32% jump is what we've seen in their revenues, and this is not even the festive quarter. That has reflected in an EBITDA growth of 43%. That means margins have come in around 100 basis points higher than the same time last quarter, and the net profit has grown by around 37% as well. They have an investor call tomorrow at around 3 p.m. So before that, we don't have other internal details. But the key to track here will be, one, the increasing average selling price, which the management has been guiding at, store expansion that the company is doing, importantly, higher share of exclusive brands, which give them higher margins as well, and increasing share of growth coming in from pre-owned watches. If asset prices are something to go by, the best asset class has been Rolex watches over the last 6 years, has beat all the other investment asset classes in terms of price appreciation, and that's something we've seen in pre-owned watches sales as well. And finally, the fact that they position themselves as luxury, they are now extending that to other categories like fine jewelry and luxury luggage as well, for which they've opened a couple of stores. So expansion of that beyond just watches is something that the street will eye. But for now, strong numbers and a stronger stock performance.
Oh, absolutely. Average selling price of 7 lakh rupees, 7 lakh plus. I'm still kind of dealing with that number in my head, but it's really showing up well for Ethos shareholders. That's the stock that's on the move on the upside today. Well, thank you, Mangalam, very much for that. Of course, the big news for the market today, of course, here in India as well, is the lower CPI print that we had, and the fact that inflation has fallen not just in India, but of course in US as well, which has sparked off this big equity rally. We'll take a break right now, but on the other side, Lata will be chatting with Chetan Iyer, Chief Asia Economist at Morgan Stanley, to talk about some of these themes, and he joins in from the sidelines of the Morgan Stanley Investor Conference, which is underway in Singapore.